What's going on, all my greedy bastards? Thank you, Michigan Weather. My internet is still out, so we're over here. Change of scenery yet again, but we're going to go over a price prediction heading into the beginning of the week and by the end of the week. And this is the most important week for the overall markets that we have had since the crash of 2020, when the Fed slashed interest rates from 2.5% down to 0. So all eyes are going to be on this, and this is going to determine what is going to happen with AMC, at least in the short term. You guys don't need to be reminded. The trade is still on the table. I continue to buy more each and every day. The stock is down, but we could be in for a little bit of pain before we ultimately do see the MOAS. So that's what we're going to go over here in this video, provide you guys all the due diligence that you need to know heading into tomorrow. So hit that like button for me, consider subscribing to the channel, and check out the links down below in the description of this video if you guys want to get totally free stock with a brokerage that does not use payment for order flow. Help support the channel as well. I get a free share, you get a free share. It's a win-win scenario. Check the link out for Public. That's where I've been buying a lot of my AMC shares, and check out the pinned comment down below. But let's get straight into this video. So on Friday, we definitely seen a rocky day overall, down 6.86% in regular trading, down a little under 0.5% in after hours. Now, we did actually break under this level that I have been watching for a lot, which is $28.30 per share. We typically go under that intraday. You guys can see all these candlestick wicks, and then we will close above this, but we did not. We closed at $27.44 per share, literally right in the middle between these two support levels. And I'm not totally throwing 28.30 out the window as a possible support or a continued support, but definitely watch at this point the $26.50 mark. And then your worst case scenario, which we'll talk about a little bit more, I think it's going to be around $20 per share. A lot of people are saying watch that 17.50 gap to be filled. I'm not so certain that's actually going to happen, and we're going to get into a little bit of why I don't think this is going to happen, but it is possible. So keep that in your minds. Now let's jump straight into the Fed meeting, what the expectations are, what is going to happen, or from the best guesses we can give, right? Nobody knows, me, you, nobody knows what the Fed is actually going to say. But December 14th through the 15th, this is Tuesday and Wednesday. These are very important days, because at this point I think it's widely priced in by the markets that the Fed is going to speed up tapering by even 2 or 3 times as fast. If that happens and that's it, we don't get any information about rates going up faster or anything about rates, then I think the markets will actually rally off of this. What I don't think is priced in is the Fed coming out and saying, hey, we might have to start raising rates next Fed meeting, which would be in January or February or March. If that happens, then the markets could get a little bit bloody and fearful, because the bond rates are not pricing in the first interest rate hike increase until June of next year, and then 2 more after that. So if we start to get a scheduled rate hike increase, then you're definitely looking at some pain for the marketplace. If we just get what we're expecting, 2 to 3 times faster tapering, I actually think the markets will rally off of that, because that's information we already know about. And that's what happens with these fear catalysts. The fear is always greater until you get to the catalyst. Once the catalyst is over and nothing crazy is announced, the markets always rally after that. So that's really what you guys need to know playing into AMC and what to expect throughout the beginning of the week. I do think that Monday is the first day before really the Fed meeting starts. So I do expect a bounce overall, specifically in AMC, because we were down 7.2%, and we are very oversold even on the RSI, right? So I do expect a bounce coming on Monday. Mondays tend to be very green days overall, and I just expect a wide bounce as well for the overall markets for a lot of our stocks that we're invested in. But like I said, Tuesday and Wednesday, those are going to be the real days, especially Tuesday, that you're really up in limbo. That's going to be a very important day to gauge market sentiment and what potentially is going to happen. Ideally, I want to see a lot of fear on Tuesday heading into the Fed actually talking on Wednesday. It should calm down those fears. If we do get a rally up until the Fed, then I would actually expect a little bit more of a sell-off. So that's basically what you guys need to know. I ultimately think after the Fed meeting, we will probably rally in the markets, as long as he does not start talking about raising interest rates really fast, which I It's really hard to tell, but from what the data that we are getting, the highest inflation reading since 1982 at 6.8%, it does look like we're going to get some verbiage of rate hike increases, but I don't know if he wants to spook the market like that, so it's really hard to sit here and guess with you guys. But I will just definitely watch out for that and keep you guys informed, because in the 80s, interest rates were in between 20 and 15%. Right now, they're at 0. So if we're at the same inflation levels as 1982, when interest rates were at 15% to combat inflation, I think it's a given he's going to have to raise interest rates, but I don't think he's necessarily going to do that on this meeting. I think that might be the January or February meeting. So, all right, now that that is out of the way, let's get into some of the Ortex data, and then at the end, we'll circle back to more of the technicals. So for an estimated short interest of free float, we're looking at 18.63%. Current shares that are sold short of 95.54 million. And we do know these numbers are not 100% accurate. It's a good gauge to give us a guess on where the actual short interest is going to come in on this exchange reported short interest chart, if you will, on whatever day that comes out in about a week and a half from now. But we know the short interest is well over 20%. The market makers, hedge funds, they use the option chain to make it look like they have covered, to report back to their brokers that they have covered, when in all reality they have not. So the real interest rate, or not interest rate, but short interest is in between 20 and 40% in my personal opinion, or really in between 40 and 80% when you account for all this. But I think it's pretty well known it's going to come in well over 20% on this next exchange reported short interest day. Cost to borrow, not really moving around too much. I still don't believe these numbers. I think it's going to be a lot higher if you're trying to sell a risky stock like AMC short. So take that with a grain of salt. Share utilization is at 77.57%. And then the days to cover, 2.31. That's incredibly bullish. The higher this goes, the better. That means it's going to take longer for the shorts to get out of their short positions. And that's ultimately what we want to see. So that's really from everything from the Ortex data. Take it with a grain of salt. We know what the actual numbers are. It's just good to go over these and get a baseline of what we're actually looking at for the exchange reported short interest day. Now, for the Stocko Tracker data, we are looking at a lot of calls that could potentially run into the money. Really, if we do get that bounce on Monday, you're going to see a lot of calls that run into the money. You're going to see a lot of puts that run out of the money. That's that double-ended buying power, right? When the puts go from into the money, out of the money, especially with a low days to cover, well, days to expiration, then you see the market makers have to de-hedge those puts by buying shares. And then on top of that, the calls, obviously, if the stock's going up, calls run from out of the money into the money, which is another source of buying power that has to come from the market makers. So I do expect a lot of buying power from the market makers on Monday. If we do get that strong close throughout the rest of the week, then we could go absolutely parabolic, because we only have 17,000 calls that are in the money, 325,000 calls that are out of the money. But what's even more exciting is the puts. 101,000 puts that are in the money, 114,000 puts that are out of the money. That in the money in the money number is the one that really does matter. So that's what I'm going to be watching pretty close. Like I said, I do expect a bounce on Monday, some pain possibly Tuesday and Wednesday, and then a continued rally throughout the rest of the week. After the markets calm down, they realize the Fed isn't as hawkish as they thought he was going to be. So that's really from everything you need to know from the Stocko Tracker data. Talk a little bit more on a technical basis. And like I said in the beginning, a lot of people are expecting a gap fill down to 1750. I'm not so certain that's going to happen. I do think the worst case scenario is going to be about $20 per share. That's a psychological. I mean, there is a little bit of support over here. You guys can see this action, this stair step like action we've seen back here in late May. But $20 is going to be a psychological level. Even if you're not an ape, you're not invested in the short squeeze or the MOAS, you're likely to buy some shares at $20 per share just because you're going to be expecting a bounce. At least I like to look at this. If I was not an ape invested in AMC for the MOAS, would I buy shares at $20 per share expecting a slight bounce? If not a big bounce? And the answer is definitely a hard yes. So I do expect a lot of support around $20 per share. Worst case scenario, like absolute worst case scenario by the end of this week, 1750. I don't think that is going to happen though. So I'm not convinced it's going to happen, but absolute worst case scenario is that. Preferably, we do stay above 2650. Not really expecting that though. And best case scenario is we breach above the 200-day moving average, which is going to be our resistance level, as we have seen many times. Take a look at that. That is textbook resistance level at this 200-day moving average, and that is at $31.83 per share. If we get a strong bounce Monday, we get a strong bounce after the Fed meeting, so we're talking the end of the day Wednesday, Thursday, and Friday, expect to go over $35 per share. I think that is very reasonable. So that's basically going to be all for this video. I do want to see the volume actually die down, and a lot of people are confused about this. When the volume goes down, that means less shares are trading hands. You don't have as many traders. Once traders come in, they're willing to pay more for the stock. So just imagine on the bid to ask on the actual order book to drive a stock up from low volume to high volume. If you have holders in the stock like we have right now, say somebody's willing to buy the stock at $40 per share, and then all these traders come in and they start to buy it for $40.25. They start to buy it for $40.50, and they just keep piling in. That's where you get the big increases in share price, just like we've seen back here in January, low volume into high volume, and what we've seen back in June, from very low volume at the end of April, early May, to very large volume and bullish activity. Just a lot of traders that hopped into the stock back here and back here that do ultimately push that bid up to crazy levels, and we get those big gains before the shorts actually cover. So that's really what I want to see. That is the scoop. That is the price prediction by the end of the week, and it's really a range. Like I said, my worst case scenario, $20 per share. People's, what I've been hearing a lot, $17.50. Worst case scenario by the end of this week. I don't see that actually happening. Best case scenario, we stay above $26.50 per share, and the base case scenario, hopefully we stay above $26.50. Best case scenario, we cross above $35 per share, or at least break out past the 200-day moving average at $31.83 per share. So that is going to be all for this video. Hit that like button for me. Consider subscribing to the channel. Check out the pinned comment as well as the link for Public, Moomoo, and Webull if you guys want to get totally free stock. Public, it only takes about 3 minutes to sign up and receive your free stock. You can choose what free stock you want, so definitely let me know down below in the comment section what free stock that you got and how much you got, what you chose, all of that good stuff. So that's going to be all. Love and appreciate you guys. Thank you for watching this video. I will see you in the next one.